Okay, just a few matters of protocol as we get into the webinar here. Everyone will be on mute, so there will be no audio during the session. You can type questions directly to Nick, and we'll just hold them to the end. Otherwise, sit back and enjoy. We're going to do about 20 straight minutes here. The goal, getting you guys all back to work since everyone's very busy. We will not be going a full hour. This webinar will be recorded. We're going to post it to a blog, and we will send out a link so you can get the archive for your viewing pleasure at any time. Okay, so my name is Matt Ellis. I'm the founder and CEO at Measurable. We are a software company specialized in sustainability data management, collection, and reporting. Focus of today's discussion is GRESB, very specifically for commercial real estate owners and asset managers, as well as developers, and how they can report sustainability performance. Let's get going with the problem statement today. The fact of the matter is that disclosure around environmental, social, governance indicators is all but required by law, and in many instances, actually, it is required by law. So let's take a quick look at the three drivers of this. The first one, of course, is the investors, with which you're all familiar. Investors are the institutionals, the pension funds, the sovereign wealth funds. These guys are demanding transparency around non-financial data. Why are they doing this? About 3 years ago now, Goldman Sachs came out with a very influential paper that tied financial performance to non-financial measurement and disclosure. And statistically speaking, the guys at Goldman found that companies who disclosed on sustainability outperformed by about 2% in terms of their share price or equity price. And that got a lot of investors very interested in this information. So they have been driving for it. And as you know, GRESB, the folks here in the middle label, are an investor-backed reporting standard. So that means that they have about $4 trillion in investor dollars behind them to convince you all, the reporters, to share this information. Similarly with CDP, except a huge order of magnitude difference, about $100 trillion in investor capital behind them asking for this information on sustainability. GRI, a different reporting standard, is not a investor-backed standard, but it is one that is universally adopted. So that's the problem, is we have to get this information. Unfortunately, of course, it's extremely difficult to collect it. It's extremely difficult to report it. And then that leaves nothing to say about actually doing something about the information that we collect. All right. Let's drill into GRESB specifically then. What is this thing? It's, as many of you know, a reporting standard that came out of Holland about 5 years ago. Dr. Niels Koch was one of the co-founders, and they were driving at getting portfolio-level information on real estate owners and asset managers. They really wanted to understand the relationship between non-financial and financial performance. So they created a survey. It was an academic exercise to begin with, and it's really blossomed. And these guys have done a phenomenal job now of getting investors and owners of real estate to participate in a regime of reporting. And when you read the GRESB reports, you can see the phenomenal growth of this exercise year over year. The process specifically is one that feels a lot like tax season. So the good and the bad here. The bad is that it is hard to do and it takes a lot of time. And I've kind of outlined the major milestones here from the opening of the reporting season and then a couple of the bumps that happen along the way. And having done this for several years, I can say that this is pretty much the status quo. The report will open. People will do almost nothing about it for 30 days. Then they'll try to figure out where their data lies. And of course, this is going to require meter and asset level data to be aggregated into portfolio level information. They're going to have to interact with a huge range of stakeholders, third-party property managers, service providers, engineers, people internal and external to their company. And that creates a tremendous amount of confusion. So we're trying to get data. We find that data is incomplete or inaccurate. We're trying to get information from lots of different parties. They're hard to reach. They don't care and they don't get back. Many emails, many spreadsheets later, we end up with a bit of a problem, which is that we have incomplete, inaccurate reports. Then the auditing period kicks in, and you can bet that that will be more rigorous this year than any year prior because of the acquisition of GBCI, or of GRESB by GBCI, the merger of those two entities. They're really going to step up their game on validating the information that you all disclose. So that's going to be in play. The reporting season will close. Audits will continue to run. And then a month or a few months later, we're actually going to find out the results of this process. All right. So this is about 3 months of anxiety, discomfort, and difficulty, unless you really have had your act together, not just in the month prior, the 2 months prior, but year-round. Okay? So let's go ahead and focus this presentation on 5 problems. Measurable put up a blog around these. You can access that now. These are the major things that are sticking points in how people disclose their performance to GRESB and, quite honestly, to other reporting standards like CDP or GRI. These are not totally unique to GRESB. But let's look at the first of these. Last year, GRESB introduced the concept of indirect management. And all that really meant was when owners said, look, we don't have control over these properties. It's a single tenant. They're on a triple net lease. They set their own standards, their own policies. They swap out the lights and the HVAC at their leisure. We really don't have much to do with these guys. And this is a whole class of residential and industrial real estate most commonly. And GRESB wanted to allow owners of these types of assets to report them under a different label called indirectly managed versus direct management. Unfortunately, a lot of bad guidance got out there last year, and a lot of people took this to mean that this was an easy way to get compared against underperforming properties and therefore get a better score. That is not the intent of this category of reporting. The guidance on this is pretty clear, although it could be tightened up a bit, but let's read it. Where a single tenant has the greatest authority to introduce and implement operating policies and environmental policies. So if I were a strict constructionist of the Constitution here, you need to read this very narrowly. The intent is, by and large, to report your assets as directly managed. We own these things, we control them, we influence them to some degree, okay? What GRESB is saying here is we're a single tenant, okay, one entity occupying this building, and it could be one tenant in a multi-tenant building, that's fine, has the majority authority, right, to create and put into play operating and environmental policies. And when you read that, you have to realize that that represents a very narrow range of properties. It is not the case that we should be seeing huge swaths of the American reporting sector or internationally report under this label. Okay, so it's not okay just to say, hey, it's multi-tenant, it's indirect. That's not the guidance. It's not okay to say it's triple net, therefore it's indirect. That's not the guidance. It's not okay to say that we talk with our tenants once in a while, therefore it's indirect. That's not the guidance. So be very careful about what you choose to report. It is a judgment call, but stay true to the spirit of the process and the benchmark. Otherwise, we're going to end up with a lot of data in the wrong places, and it's not going to help anybody. Okay. The next thing that is on the agenda is the ENERGY STAR converter. A lot of real estate companies in Canada and the U.S. use the EPA ENERGY STAR program to collect and benchmark their buildings. Therefore, it makes it a nice repository of data to spit out to GRESB. Now, there's a couple problems here, or a lot of problems here. All right. First is that when you use the spreadsheet, be very slow and methodical. There's about 32 steps to using this thing correctly. Fundamentally, once you push data out of ENERGY STAR and into this spreadsheet, be very wary that you're going to lose or over-allocate a lot of data. It's truncating buildings that come in with less than 12 months. These are not idiosyncrasies of the spreadsheet itself. They're idiosyncrasies of ENERGY STAR and how it behaves. But suffice it to say, if you have a building share deed with more than 24 months of data and you only owned it for, say, 9 or 18 months, you're going to be picking up that extra data. If you have buildings with less than 12 months, it could be dropped entirely. If you have outliers or mistakes in your data, those are going to get picked up, and they're very hard to see when they're rolled up into an overall spreadsheet. Data coverage, which is a concept recently created in GRESB, which is trying to get at how much data for a certain portion of the building. This is really not possible to do in the spreadsheet, at least not correctly. So you're going to have to call GRESB and ask them what your alternatives are if you're a spreadsheet user. Probably will come down to just not being able to calculate this correctly. Mixed use is in a similar bucket here. You don't have the opportunity to break out these buildings by floor space type in the converter. You're going to have to dump them into the other classification. This is problematic mostly because anything then can get into other, and you could be compared against a melange of different property types. GRESB's worked very hard to become a floor space reporting standard. So they really want you to report your buildings by office and retail, if that's what it is, and the proportion thereof. So you're going to lose a lot of granularity when you move through this process. So be very, very careful using this tool. I talked about floor space reporting. A lot of people have basically been shrugging their shoulders on this over the years, and be careful about doing that. If you're reporting a 50-50 office retail building as all office, you're going to get compared against all office, even though the retail portion may be performing radically different. All right, so there is downsides to doing this that can directly impact your score, not least of which, for the spirit of the exercise, is giving everybody a great granular feel for what the benchmark is really telling them. We have a system at Measurable to deal with everything we've mentioned above, and in particular, we're using some screenshots here to indicate what that would look like. And the reality of it is it's not just purely breaking out floor space types, but you really need to pay attention to the meter level data, what's serving what aspect of the building. Okay, it's hard to distinguish one from the next. So this is a complex activity. There is obviously software to do it. Endeavor to do it. Get a good understanding of your portfolio, what it actually is constituted of, and report accordingly. Fourth problem we're looking at here is a really common one. It's not a good one, which is that people are generally just dropping buildings when they don't have data. And let me work my way from the bottom to the top on this. This is not a beauty pageant. Okay, if everyone uses this benchmark and just reports what they feel like in their best performing buildings, then this is not going to tell us anything at all about our relative performance. We're just going to have a beauty pageant. All right, so GRESB is very specific. They insist that you give them all assets in your portfolio. And if you have any exclusions, you better have a very good reason for omitting that building from your reporting process. Okay, so some specific examples of where buildings are getting dropped and they shouldn't be is when they're joint venture. Very, very common practice. A lot of you guys hold property in joint venture with one or more entities. If you've got that property, GRESB wants you to report it. They have a funny circumstance. You can report it either proportionally to your ownership or in total. Obviously, this leads to some double counting, and basically, for the reporter's point of view, don't worry about that. GRESB deals with it. The bottom line is they also give you a third way, which is if you own less than 25% of these things, you can just drop it entirely. But you need to do one or the other. Drop it entirely if you're less than 25%, or you include it. And when you include it, report on the whole or report on the part that you own, and do the math accordingly. Again, if it's indirectly managed, it's not an excuse to drop the building entirely. You just want to make sure you report it is indirectly managed. So we've got a screenshot here of all zeros. Well, the reason we put this is actually a legitimate outcome. You're still capturing all the qualitative aspects of your portfolio. And if you're reporting on one building and it didn't have data, so be it. The goal here is to improve over time and to get a sense of really where you are. And you can't intentionally hide these things. Otherwise, you're not getting the value out of the exercise. Fifth problem here is one really more of timing. What we've seen in the past is that people are not being true to the timelines of the reporting season. GRESB's backwards looking, 2 years historical. They're going to refer to reporting period. Make sure that the reporting period under which you're disclosing is actually obeyed. So if you intend to have a policy implemented or you're in the middle of writing something right now, don't put it on your 2015 GRESB report that's looking backwards. That's disingenuous. Right? So make sure that you really talk about the things that were in place and in effect during the reporting cycle. what this slide is kind of getting at is make sure to then think about this as an annual process and be aware always of the timeline that's in place as a result. So you've got the first quarter of the year. You really should have already been collecting and implementing this stuff in the prior year, but you need to be buttoning it up. Reporting season is going to open. Anything that you want to report on in a subsequent year really probably needs to be underway. You need to be harvesting the value of your projects. You need to be cataloging and documenting these things. There's just too little time for large organizations to turn on a dime. And then the tricky part, even more so, is that when GRESB releases the results in September and you want to react to them, you're only going to get a few months. Take the holidays, Thanksgiving and Christmas out, and the New Year. You're trying to react and allocate capital and put in place policies or hire consultants in a very, very short window, and people basically miss this every year, all right? And then they get stuck in the lurch. So this is a bigger issue than just talking about GRESB and its timelines. This is a macro issue where we really want to think about reporting best practice and continuous improvement, overused term that it is, and realize that we're always under the gun. We've always got to be preparing and implementing and collecting the data. And we really want to turn GRESB and reporting to CDP or GRI or stakeholders or your managers into snapshots in time by and large. We're always holding the data. We always want to be able to rip off a report, and we don't want it to be a giant headache. So that is the end of the main portion of the presentation. Obviously, we present measurable and platforms like it, and there's several excellent ones as solutions to this problem that we described of having to report and disclose environmental, social, governance data. Where we need to get to, and where software can be very effective, is turning this into a financial grade exercise. That means highly auditable, single source of truth. We can track down to the meter every reading, every expenditure for every asset. We can interact directly with every third party or internal person to contribute to this data stream, and it's always actionable. GRESB is a report and a point in time, but these portfolios that you all control and own are changing on a monthly and certainly a quarterly basis. Assets bought and sold, new loans being put in place, new projects being implemented. To send your investors a report that looks back at what happened over the last year or two, you could have a completely different portfolio. So we need to have the process become effectively real-time or as near real-time as possible. And software is, of course, the way to make this manageable. These are some folks with whom we've had the pleasure of working and some of the results that we've been able to attain for them, specifically in the process that we've demonstrated today, and solving the pain points that we brought up, all of which are available in a blog. You can read these through, think about them, comment on them, tell us we're right, wrong, or otherwise on some of the points that we raised. We very much appreciate your time and consideration around this stuff, and we really encourage feedback. It is how Measurable has grown, and I think very much will be how the industry continues to mature and become more professional, more rigorous around how it manages and discloses financial data. So at this point, we're going to turn to questions. We've got a few, and let me start. Let's just do, this one came out at the beginning, so I'll just kind of go in order here. It says, why would we report to multiple? So I think why we're reporting to multiple reporting standards and who's doing it. Okay, so they're referring to CDP, GRI, DJSI, the Dow Jones Sustainability Index, obviously GRESB. There are, I think at one count, there was a paper on this, about 500 of these things now around the world. And they are industry specific, they are sector specific, they're supply chain specific. Why report to multiple? Well, the short answer is and we wrote a blog on this as well, so it's scanned for that. Don't go to a doctor and get a serious diagnosis and have only one opinion, right? We really want to go out and get an opinion from GRESB We want to get an opinion from CDP. We want to get an opinion, frankly, from GRI, and maybe our own report on what we think is material, and get the feedback from our investors and our stakeholders, right? We need to put ourselves in a position to get honest feedback across a range of metrics, not just one standards interpretation of what the truth is. So that is why it's useful to get multiple reports done. Who does this? Industry leaders are doing this in the real estate sector, and of course, more broadly, you see a very common disclosure to the big three, the GRI, CDP, GRESB, triad. Prologis does this, General Growth Properties Digest, HCP. If you visit their website, you can see all the reports. So increasingly, people are, as they mature, adopting a triple reporting process, using fundamentally the same or similar data and disclosing it in multiple formats and getting different benchmarks and scores as a result. Okay, so another question here: how do we do data coverage properly? We were talking about data coverage. Remember, that's just what proportion of your portfolio and therefore of your assets do you have data for? And the goal with this statistic is to try to encourage complete coverage. That's the ultimate end goal of this. So when we look at data coverage, it is a meter level issue. You need to have a meter, for example, that serves the whole building, be counted towards data coverage. But if you have a meter that's serving one specific tenant suite, 800 square feet out of a 100,000 square foot building, we can't let that meter get mixed up in serving the whole building and counting it towards that. So you have to parse this at the meter level. So the sad situation here is that we don't have good tools to do this unless obviously you're a measurable user, in which case you have meter level allocation tools. If you're not using us, then you're probably out of luck on how to do this, because the alternative is doing it by hand, and that is way too tedious if you have any significant number of assets. Next question is, where do we get started on data? We don't have any data, so there's nothing to report. And I think I said, earlier in the presentation, technically speaking, this is an okay situation, or it's not an ideal situation, but it's a permissible situation. Folks who don't have data, that doesn't mean you can't report. It's a place to start. If you don't have data, maybe you're probably a first-time reporter, use GRESB'S grace period, because obviously you're not going to perform well. In the measurable system, we connect directly to utility companies, so you can pull data from your utility company that cleans the data, scrubs it, so all the gaps and overlaps, restatements are taken out and fixed, and then it pumps that data into Energy Star. That obviously helps with more than just GRESB. It's going to help with your disclosure requirements. But if you don't have any data, you're going to need to engage somebody, a consultant or a service provider, to get the data from the utility company. I highly recommend automating that data stream. Manual entry. When I was at CBRE, we did studies and found substantial degradation of quality and simple lack of input when it was manually entered by PMs. So definitely automate it to get going, and that is the best practice there. Okay, so this is a good question to follow on to that, which is, well, how do we get tenant data? This is a big issue in the industry, obviously, and very much so for the retail, multifamily, industrial folks, where you're on arm's distance length from the tenant and certainly aren't paying their bills in most instances. So you don't have any access to the data. The same answer as the prior one, though. You need to have a system in place that resident or that occupant can use to securely enter their utility information, and then the next couple steps are to roll that into your data stream in Energy Star for your reporting and analysis purposes. Measurable is doing a pilot with a couple of our customers around tenant data access right now. We hope to give you all a really good system and feature for automating that end to end. The current state, though, is difficult until we release that feature. You really need to engage with these tenants on a one-off basis. Even where there's legislation compelling tenant disclosure, what we found from the landlords and the management companies is that it's just not happening, or it's too difficult to chase down all the tenants and get them to disclose. Let's see, so another one here. What does the GBCI acquisition mean? Okay, so this is a question earlier, well, this is late last year. The announcement came out that there was a merger / acquisition of GBCI and GRESB. GBCI, obviously, a certification body behind USGBC, parallel to it. There's definitely, I think in a macro sense, it's an interesting change because the marketplace of sustainability standards and benchmarks and scores and financial instruments is, of course, maturing. And there's increasing fragmentation and also, in some instances, consolidation. And this is an instance, of course, of consolidation between building level rating systems and portfolio level rating system or benchmark like GRESB. So in that sense, I think it means consolidation probably is a good thing because it's going to be less chaos in the market about who to report to, what streams of data are we reporting. The confusion, I think the thing that came out of this that I heard from the industry, there's a couple of folks who have written on this, and we have a blog on this as well that goes into some depth. The for-profit nature of GRESB as an investor-backed entity is somewhat unusual relative to, say, a CDP, who is a not-for-profit. The concern on the consolidation was really around market power, who's controlling information, what's the ultimate end goal of this information. I think that's the concern. The upside of this, I very much believe in, is that GRESB is doing extremely important work. We need systems for disclosure of non-financial performance, and we need to get that data out there. And these guys have done more than anybody, I would argue, to make that happen. So that's important, and I think the rigor and the integrity of the benchmark will be greatly enhanced by the infrastructure at GBCI. These are certification guys. They're very, very smart, and they're going to bring better systems to ensure data integrity. We're going to ensure truthfulness and accuracy of reporting, and that is going to raise the bar on reporting for everybody and the utility of the data that comes out of it. So I think it's the acquisition, the merger, it's a good thing. There's certainly plenty of debate out there. You can get it in the blogosphere, but I think status quo prevails, which is more data, more accurately, and everyone's going to be asking for this type of information. So it's time to get a system in place. That gets us to the top of the half hour. It was a great pleasure being with you all, and we will now end the webinar. We'll take a time to post it up on the blog, and we certainly welcome your feedback and any questions.